Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pump in the charts as well as the green on the stock market, all thanks due to the PCE data, which came in relatively neutral on a month-to-month basis, and then, of course, positive on a quarterly basis, where we do see that in the last 3 months, the PCE inflation has decreased significantly and core PCE has somewhat decreased. Now, core is what the Fed is biased towards, and so we'll see if this has any effect on their thinking. But overall, the market is taking this as positive data because we are in quarterly reviews right now. And so, of course, as economists, those are significant tracks of periods of time which to measure inflation against. And so, part of the market believes that Jerome Powell and the Federal Reserve will go easier on interest rates if they see that number softening on a quarterly basis as opposed to just month to month, which could be hit or miss depending on whatever month, but that quarterly average is fairly significant in their minds. If we do look at the Bitcoin chart, we do see that pump that just came with the PCE data news. Of course, the same thing exists on the stock market, which looks fairly bullish in its orientation. And while this could end up being just a continuation of this little bit of a downtrend, as we do have a rising wedge breaking down, and that measured move, right? That measured move of the rising wedge is the height of the wedge. Now, this is a very extended wedge, so I'm a little reluctant to use this measurement to say that we should go all the way down here, but due to these naked candles right here, I think there is a high likelihood that this pattern does play out and maybe even wicks lower just to grab that liquidity, and then we can see if we can put in a higher low. But again, like there could be a liquidity grab coming up, and so that could all be part of that while still maintaining this series of higher lows, which ultimately could lead to a higher high, right? And that's what we're all looking for if you're bullish. Now, from a structural point of view, this is very difficult because if we do end up breaking down to this level, right, there's a good chance that we can break down lower, and then, well, maybe we'll make a double bottom, and that could still be bullish, but it's just this is a lot of chop that we have to get through. And in the past, it was just very, very difficult to get out of this stuff. And we also end up starting to lose our momentum if we do end up taking that course on the chart, which, if we do look at my momentum pools, right now we are on top of the daily momentum pool that I established yesterday that we needed to maintain and hold above today. And if we do close above this momentum pool, guys, that's a very bullish. That's a very bullish sign, especially since we'll also be over this a 2 to 5 day projection, which is just a skinny line right now. Usually it's a big fat pool, but it's just a skinny line indicating we really do need to conquer that level. And with a price action here right now, this is a good leading indicator that we could possibly hold that level. Now, if we do end up breaking down below essentially what is approximately 20,300, then under 20,300 we're starting to drown in the pool again. Oh, we're just swimming around, but if we get towards the bottom, we could be in danger of drowning. And if we get under it or close under it, that would suggest dying, our momentum dying for the day. And then we'll have to assess the next day as this thing perhaps grabs liquidity or even moves down to the bottom of that range that we were just looking at, right? Perhaps even the very bottom, if not just this mid channel. But let's go ahead and review the signals that I put out last night, because we can also see that we are strongly maintaining above the bullish bias right here. And while it's not the most obvious thing. As long as we can hold that level, then from a trading perspective, personally, not financial advice, I am going to be uh, much more oriented towards the long position as long as we're holding over this bullish bias right here at the 20,375. Of course, I don't need to update this momentum pool, and I don't need to update this scale over here that I have, because I did make these last night, and so they are valid until the end of the day today. And of course, if we do end up breaking below this 19,945, I'll just be very skeptical. And if we break under 19,790, then I'm going to be a bearish bias. And again, it's not based upon price action or support and resistance. It's based upon momentum. We'll essentially have lost our daily momentum at that level, and so it will just be very easy to fall to the bottom of the range. Okay, so again, guys, like, this is a totally different way of looking at things than most people look at, and so this is an additional insight that you can use. Now, sometimes it just lines up really well with support and resistance, right? You see this line, you see this line, you see my bullish bias, you see my bearish bias, but other times it doesn't. Okay, other times it doesn't. So this scale is an additional confluence, and it's highly effective. Okay, guys. Because the range itself can't really tell you where price action is biased towards, but my scale can, because it's based upon momentum. Okay, so it does give us biases. It does allow for some type of a call, and these are my judgments based upon four different types of momentum, which I've measured against five different time scales. So this is what I present and is my own judgment in terms of calls. Guys, let's go ahead and just consider what we would need to do to validate this. We would probably need one or two 4-hour candles to close above this momentum pool, if not just the solid day itself to close above here. And if we can get a day candle, or we can get a couple 4-hour candles, then I'll be uh, pretty bullishly biased, at least until we can do the next measurement. And again, the risk here is really under 19,945. That's personally where I would put a stop loss if I am long right now, because I don't think we need to wait until the bottom of the box. Um, we do have this little ambiguity zone right here, and then as soon as we lose the box, there is a good chance that we could have a very quick fall either to this fill this candle or to the bottom of the range. And so again, that's why I provide this kind of bullish ish but watch out line. It just can help with a little bit of a stop loss if you are long, especially as we consider that this could be just a lower high, and that rising wedge formation could continue to play out with a measured move basically to the bottom of our momentum pool, which could suggest that momentum could continue to the downside. And so just a little bit of a gray area there. Now, the important thing in terms of the support and resistance is that if we are able to put 4-hour candles above this red line, which is right here at 20,420, a great number there, right? Then you could see flipping this into support as opposed to what it's acting as kind of right now as resistance, right? And you see this wick, this down pressure wick right here. Um, we don't want just a wick above. We want 4-hour candles closing above there, right? Or a daily candle closing above there in order to say that we've recaptured this support. Otherwise, again, it could just be a liquidity grab from this naked candle, and then continuing on the way to get a liquidity grab on these naked candles before deciding which way to go. So guys, I think I'm going to end it there. That was your alpha for the day. Just in terms of risk, I would say the DXY, in fact, is putting in a completion of that inverse head and shoulders that I was talking about on my Twitter. And also in the Discord, if you guys are in the group, you can see that I did mark out the possibility for this inverse head and shoulders here, and that would have a measured move all the way up to here, all the way up to 111, perhaps 111 and a half, where we do see this naked candle up here, and so there could be some type of a liquidity grab by the foreign exchange traders. Now, as the dollar pushes up, right? That would put pressure to the downside on stocks and crypto. So just watch out for this, because essentially what we've done is we've created a head and shoulders. We retested this line, we broke out of it, we retested it as support, and now we're starting to build some support, and we could see a pop up here to the measured move. Okay, and so be aware this head and shoulders could be working out, and whatever pop up that we have on the chart right now, it could end up being just a little bit of a fake out, especially if we can't flip this resistance into support with a couple 4-hour candles confirming that. Okay. So lots of concerns there, a lot of nuance. We have some PCE data and some inflation issues with the Jerome Powell coming up. So guys, just stay safe. Okay, so that was your alpha for the day. Stay safe and happy trading.